Corn limit is up and soybeans close to $15 a bushel. And some of his customers are telling they are crying for the best. We are going to speak with Michael Zuzolo, President of Global Commodity Analytics, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, how are you today? So, your customers are happy right now. They are crying, but they are crying for the best.
They're crying tears of joy because they love the price, but they're very worried about planting. And, I heard it for the first time today, Luis, from a client in Southern Illinois that had talked about the clients that he works with are farmers as well. He farms and he works with farmer clients as well because of the business he's in. And the talk right now in the coffee shop is that they are very nervous about planting corn, not unlike what Argentina had to deal with and what Brazil had to deal with in the safrinha crop, where it's extremely wet now. It looks like cold weather for the next 7 days. And they're very nervous about planting into that kind of condition and then it turning off hot and dry. And so I think the market has gotten a lot of tailwinds from exactly this, that the freeze happened the last 2 nights. It scared the bean bear out of his position. It scared the wheat bear out of his position. And the corn bull has been waiting for it to be able to take advantage of the discount in corn versus the soybeans and to see corn go up against beans, because we've been waiting for that for probably 3 or 4 months. And finally, the weather adjusted with this cooler wetter pattern to where the corn was clearly, along with bean oil, the price leader, the upside, gaining over 4% on Thursday, limit up move, closing on the May and the July contracts.
Yes, the USDA attaché in Buenos Aires, in Argentina, has updated his forecast for the corn crop, and he reduced his corn crop by some million metric tons. Do you see that related with a new limit on corn?
I see that as a supportive feature from earlier in the week, along with the Brazilian meat lobby suggesting that Brazil could import Ukrainian and US corn. However, I have to say that the Rosario exchange came out just today before the market went limit up and said that they're taking their corn estimate for Argentina from 48.5 million tons to 50 million tons. And we still have production expectations in Brazil's safrinha corn crop that could surpass the 105 to go up to 107 total million metric tons, because the second crop could be that big. I think that the South American supply issue is still an issue that the trade can't get their arms around because of all these different estimates. But I also believe that the trade has gone from ignoring the low estimates to embracing the low estimates and trying to price some of that in, expecting that the end result will be how much corn exports go out the door in April from Brazil and Argentina, how many bean exports go out the door from Brazil and, to a lesser degree, Argentina in the month of April compared to the United States. And that will ultimately be the deciding factor. I'll throw one more thing out at you too, Luis. The last 2 weeks in a row now, we've had the weekly export sales here in the United States show demand rationing in grains. I think that's a fair thing to say at this point, given the track that we've seen the last 2 weeks. And when you look at USDA's expectations for this marketing year, we're on week 46 of 52 in wheat, and we're on week 33 for corn and beans. And right now, after Thursday's report, the expectations, or I should say the accumulated exports to date for wheat, are at 46% of USDA's forecast. For corn, it's at 80% in wheat. It's at 58% in corn. and it's at 90% in soybeans. And so we're starting to see, I think, the higher price really start to ration demand at this stage on the export front, right at the time when we have the South American crop coming on. So I will say it again, like I said last week, this is in my opinion, the only way to hedge is the sell and defend model. And I do think you should hedge because I do think that this still is mainly a supply driven market. And I think this week's price action is kind of a clinic on that, where we've got weather problems in the United States compared to demand issues here in the export front.
Yes, and if any Brazilian farmer hears you, they would use the same model because probably some of the Brazilian farmers that didn't sell before are getting nervous today because the Brazilian real has appreciated against the US dollar.
Yeah, this is a big thing. I think that we really have to, I think it's the number one thing other than the weather that we really have to watch is that for a variety of reasons, the dollar could turn very quickly against us and rally and take the prices of the Brazilian real, the Chinese yuan, take those down again. And all of a sudden, the emerging markets are no longer the darling of the commodity investors. And therefore, the inflation bug, the reflation bull takes a big hit in terms of the emerging markets, because that's what usually drives the inflation around the world to make investors go into assets like commodities. It's about the emerging markets and their currencies going up, not down, and the dollar going down, not up. This is to me, we're fundamentally ripe for this switch in price action where the dollar could stimulate a more medium term buy signal. I could be wrong. The dollar could remain weak, but it just goes back to of all the things I look at, this promotes the idea of the sell and defend model. And, we haven't talked about specifics very much. And because I'm going to say some specific stuff, I do want to reiterate that trading commodities doesn't involve substantial risk of loss. It's not meant for all investors. But I'll give you where I'm at right now in 2021 hedges, just to give kind of a marker here as we go into the late part of April and start into May, because we're in the middle of, or getting close to the middle of planting here in the United States. So in the wheat for 21 hedges, brokerage clients are 40% sold with 20% of that in puts. In corn, we're 40% sold with 15% of that in bought puts. In soybeans, we're 65% of expected production sold for brokerage clients. 40% of that is with either reownership or with some bought puts. And cash marketers are pretty aggressive on the sales for me right now on the beans. We just moved to 60% sold about 3 days ago in new crop without any kind of reownership on the books for new crop beans. And I can go into detail why I did that later. For cattle and hogs, I pulled all hedges at this point. I'm not hedged in any of the livestock at this stage. I'm actually looking to probably buy some feeder cattle as soon as the end of this week and maybe next week.
And how are you seeing the factor just announced by China that they would shift in the mills from corn to wheat?
This makes perfect sense because there is more wheat around the world, especially in their part of the world because of Australia's crop. And it makes sense from a standpoint of how pricey their corn is. I have been told that Chinese producers, feeders, I should say, hog and livestock feeders, are turning away from high priced corn and really seeking out feed wheat. And I think this makes perfect sense because, as you and I have talked about, that wheat corn spread, I believe, got down close to 40 cents on soft red wheat minus corn on the board of trade price today. That is feed that just screams to the feeder, the livestock feeder, get as much wheat bought as you possibly can right now. So we're in this level of price action and spread action that corn is going to be limited eventually to how much it can go up once we get the planters to roll and once we know what the acreage is. And maybe I'll segue here with that question that you just asked with the idea of why am I pursuing more aggressively the soybean hedges? Because I think we are adding bean acreage by the day from here on out. The longer we take to plant corn here in this country, given the break evens, given the cost of production for fertilizer, given the availability of seed that I continue to hear, replant seed for corn is going to be very hard to get if they have to replant. So I think bean acres continue to go up from USDA's estimates. Corn, we just don't know right now.
Yes, last year we already talked on the possibility of Brazil importing corn and soybeans from the US, But it seems there is a lot more scarcity right now than a year ago.
Yeah, I think that's exactly right. I mean, I think I use a pricing model to try and get an idea for clients what we're pricing in for carryover on corn and beans and wheat. And with us hitting 650 corn today, we are below a billion bushels as far as what the trade thinks we have for this past marketing year, this current marketing year of 2021. And by going up to that 1450 area in the nearby beans, we're now getting at or just below 100 million bushels. And so I think we're really pricing in stocks to use ratios we haven't seen in probably 12 to 15 years. And it goes back to what we talked about also, Luis. We're really still tracking very closely with 2008 and 2012. Those are still very good model years for me, especially given the price action we're at versus back then. And also given that those were two very big supply driven years, just like this year is, in my opinion.
And do you think that soybeans now shifting to soybeans can break the limit of $15 a bushel?
Yeah, I mean, in the new crop, you mean, or in the old crop?
The new crop, yeah.
Yeah, I mean, this is where we've talked about the idea that if we continue to have weather problems in the world as tight as we are in the world stocks of soybeans and now corn, wherever the July and the May contracts of corn and beans go in the next 3 months, I think you have to start planning on the idea that the new crop futures prices can go to those levels as well, if not maybe surpass them. That's not a forecast, but that's how you build your plan so that you're not shocked by moves like we're seeing right now. Because what we're seeing right now is, in my opinion, almost completely driven by weather and supply. And it's a parabolic move, meaning instead of going up like this, you're going up almost straight up in terms of the angle of move. Those are the most dangerous markets because those are the ones that are hardest to figure out where the top is in the market. There's a gap in the weekly corn chart that's around 684. There's a swing objective I've been watching that's anywhere from between 650 and 668. These are price levels that I'll use to determine exactly or almost exactly where beans could get to because now we have corn as the leader to the upside. So corn should top first and then the beans after the corn gets done topping.
And there are so many weather issues to look at right now in Brazil, in Argentina, in the United States. Where do you think this is more severe?
Well, I think the problem with the weather in the United States is the high national yield that USDA's given us. They're low on acres, so I'm not really nervous about that right now, Luis, but their yield, especially in corn, being near 180 bushels an acre in four of the top five states looking at lower acreage than last year, this does not work out mathematically or statistically. And if you have more planting delays and you get more of these Iowa, Illinois, Indiana, Nebraska, Minnesota, Kansas, and Ohio into a situation where they're not planting until the middle of May, it gets really tough historically to get a 180 national yield. So that's my issue with the weather here in the United States. In Brazil and Argentina, you and I have talked about this for 3 or 4 months. It just seems unfathomable given the amount of drought in Paraná that we can have a second crop corn crop that looks average, but yet people are supporting the idea that Mato Grosso's crop is going to be so big that it's going to offset Paraná. But from what I know, Mato Grosso is about 40 to 50% of the safrinha corn crop. Paraná is about 40% of the safrinha corn crop. So how does Mato Grosso offsets Paraná? And I guess that's a question and also a statement too.
Yes, that it's a pretty hard to sell that there will be a record safrinha crop this year.
Yeah, and so that's where the weather damage, I think, in South America, if it's done, it's already done. I mean, it's to me, it's almost too late because of how late the safrinha crop got in and the dryness that we're looking at the next 10 days in Paraná. That it seems to me, if that was happening up here in the United States, given the soils that these provinces we're talking about have, it doesn't seem like you're going to get much more than 80 bushel corn at that point.
Yes, and some news that came this week was that India, a very big player, would buy ethanol from Brazil in this year. Do you think that is major a major thing for the markets?
I don't think Brazil will have the ethanol to ship India if they're going to rely on corn-based ethanol, because my understanding is they're about tapped out on sugar-based ethanol, and they've been really ramping up on corn-based ethanol. Unless it's another ethanol based upon another product, if they're looking at corn-based ethanol, if this safrinha corn crop is not as big as everybody says, or many of the people say it is going to be, I don't think Brazil will be able to meet that demand from India at this stage.
Yes, and how are you seeing the scenario for livestock producers at this point?
It's getting tougher. I just talked to a producer here in the United States about feeder pig prices. We're breaking $100 on feeder pig prices, and we're looking at $6 plus corn now, and even 6.50 in some areas that are close to ethanol plants, Louise. DDG prices are also starting to really look bad for the feed side of the equation. This is probably the biggest negative feature of this straight up market. This is why I don't like those parabolic markets, is because you destroy demand. And when it comes to livestock, it's very hard to get that demand back. So I'm nervous that if we stay at these lofty levels for another 30 days, we will take down the livestock industry that essentially brought us to this point, because it wasn't China buying so much of the grains. It was really China buying grains and pork and beef, and a lot of other countries coming in, like Mexico, buying a lot of grains and pork and beef as well, and poultry. So I really hope the livestock industry can withstand this move up in the grains, because if it lasts, I think we're going to have a really tough 2022 when it comes to the livestock demand side of the equation, supporting the grain demand. And so that's something I'm actually working on right now, with producers already starting to ask me, what about 2022 corn, bean, and wheat sales? I've really got to start thinking about that now that we've started to see the straight up price action.
Yes, I think that comes back to the notion that perhaps in the future, both Brazil and the United States, the largest corn and soybean suppliers in the world, they will be more dependent on each other to source both corn and soybeans.
Yeah, and this is where I think you bring up a massive point, because you brought it up earlier about the currencies. You know, what got Brazil and Argentina to the level of production and agriculture that they are at right now? And it really has been the exchange rates. And it's been the fact that the dollar is the reserve currency of the world. And so the exchange rates will only get more important as time goes on, as long as the dollar stays as the reserve currency for the world. And I think that's something that my clients are starting to really embrace that. They ask a lot about the currencies nowadays. 10 years ago, hardly anybody talked about it. And I like to think that I brought that to the forefront in some of the analysis that I've done. Now the producer understands the importance of the exchange rate, but it's even more important when you're trading 650 corn and almost $15 soybeans, because every little movement in the currency and exchange rates makes a bigger splash in the pool at these price levels.
Because every time you get more players, the more important is the currency exchange.
Exactly. And that, I think, is part of the reason why the funds have embraced the commodities so much, because they understand that as well. And this goes back to those bigger position limits in the grains, Luis. You know, talking about a splash in the pool, they've been able to buy more because the pool got bigger for them. Now they can pull out those longs as well, and they can make a bigger splash when they start to sell. We really got to keep that in the forefront of our minds. And that goes back to, do you sell on the way up incrementally, or do you try and pick a top and then sell when it starts going down? And do you have the discipline to be able to do that?
Now there's a long way until the harvest in the US. Do you see a lot of volatility at that
Yeah,
time?
I think it'll be record volatility this year, between the trade issues, the geopolitics, the climate change issues, the green energy policies, these bigger position limits in the commodities, and the just unbelievably historical highs in the equities markets and the stocks. And then you throw on top of that all the fiscal stimulus that we've seen because of the pandemic. And then you throw on top of that the fact we're still under a pandemic. And this is one of the things that has hurt livestock this past week, in my opinion, when the Department of State came out and added enough countries to the list of do not travel that it encompasses about 80% of all the countries in the world. They're saying don't go to if you're a United States citizen. That does not send good signals to the market, and it doesn't send good signals to the livestock market and the idea that the restaurants are going to be able to open up. So there are labor shortages here because of the stimulus bill that people literally, I heard a guy that owns a barbecue restaurant in Kansas City say to the local news last weekend, I've hired 6 people, I could hire 6 more, but people have told me they can make more money by getting their stimulus checks and unemployment than working tables and working for me at this barbecue restaurant. So there's just more than we've ever had to deal with. So that just equals more volatility to me.
Yes, the livestock producers usually take more time in order to change their investment because the investment times are different compared to agriculture. But do you think that there could be changes according to the demand to other meats, including sheep or lamb?
Yeah, I do. I think that that's one of the things we're going to have to be watching very carefully. And I think this is where the livestock producer who also farms, I heard it today for the first time, uh, a guy that runs 3,000 acres of corn and beans, but also has hogs said, I'm just going to clean out my barns and farm for the corn and beans and not mess with the livestock. I think in part of that is because he's waiting to find out what the environmental impact will be with some of the new policies and some of the new programs that the federal government's looking at doing. So I think the uncertainty, that's why I said in a half joking manner, producers are crying tears of joy if they're in the grains, but they're just plain crying tears right now in the livestock industry, especially the cattle market, if they've bought high priced feeders and now have to feed high priced corn to them and look to be selling them in the next 30 days. This is going to be a pretty tough situation. And I hope that the cattle on feed report on Friday, it does not show as big a placements as the trade is expecting. And if that's the case, then maybe we'll be able to find a low relatively soon in the cattle and the feeders.
Yes. Is there something would you like to add, or if you would like to wrap up before we finish? We talk about so many things today.
I've been doing a lot of research on everything we've been talking about. Please, if you haven't yet, sign up for a trial at globalcomresearch.com. That's globalcom with 2 M's, research.com. You'll get a 3-week free trial. I will only ask you once at the end of the trial if you're interested in working with us. Otherwise, you'll get to see a lot of neat, fresh information that maybe will help you. Thank you, Louise.
Thank you, Mike.